seconds till news event. 20 seconds till news event.
7, 6, 5, 4, 3, 2, 1. Event has occurred.
Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting. Can I get a screen and audio check at YouTube and the Bookmap Discord Trader Lab community? Thanks, Marty. We're going to rename you to Quick Draw Marty. How we doing in YouTube? Thanks, Peter. Well, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. The stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis. In the intraday developing time frame, it's taking a top-down, bottom-up approach. And it's important to understand that the market is at almost all times random. And because any input at any time can come in and disrupt the behavior of the participants. So the other aspect is if we can accept randomness and that we're not in the business of prediction, we're really in the business of probabilities or creating an edge. It's very much gaming. So most retail traders are always looking for certainty and developing confidence in their trades and confirmation. That language is in your head. It is actually an obstacle to you creating sustainability in this business, in my opinion. Most of us in the retail world, and I've been on both sides of the table, but as developing traders, we look for something to satisfy our primal psychological needs. However, that doesn't apply to this world. It's like you've landed on a different planet with different rules. So when you bring your experience in the outside world to trading, you're actually bringing a problem to actually operate in this environment. So we're going to talk about in this stream all the time is the actual environment, the methodology that you might use to develop your own trade plan, and to understand you have no control over the outcome of any individual interaction with traders. You only control when you participate and how you participate. And that's called a trade plan. That's what the Trader Lab is built on, and it is available, the Trader Lab and the community, as well as these structured trades you see me do every day in the stream, and a library of webinars is available to all of you at no cost. And you're all invited to Trader Lab, and if you're visiting in YouTube, there's a link down at the bottom. Go grab your pen and a piece of paper. I'm going to give you a couple of statistics, and I'm going to review what happened yesterday because it's very fundamental to what might happen today. General disclosure, all Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room, but if we get into real time, we go there. And not the trade call, but to observe. And this is what the 60 PDFs of structured trades look like. If you're interested in these, it's what you see me do. And these are broad strokes. You can use these as ideas to reverse engineer and make into your own. There is no right way to trade in the sense of do what somebody else does, but there is process. And if you can understand market mechanics and process, you can then build it potentially into something that you can relate to. Now let's talk about yesterday's trade. Remember, last Thursday we had a trend day up. I think we might agree the trend is up. And on Friday of last week, we had a target at 48.50. This is the auction. We had week longs in here from Friday's low. So the goal yesterday was we were looking for taking out weak longs and coming down to this range. And then after taking them out, getting long for continuation longs. So that was yesterday's plan. And if you follow the stream, and I've posted the stream up there, you guys can see it. In fact, Stephen, if you could grab yesterday's stream, if you scroll up, it's early this morning in the chat. I renamed it. And if you put that in YouTube for our visitors, they might want to watch it because everything fits inside each other. So yesterday we were looking for take out the week longs. And what is the concept? The market goes up to go down. And the market goes down, takes out the week long, sell stops under here. And once we exhaust wherever that is, and that's part of the joy of randomness, then we want to look at longs to come back here and then to go here and maybe above. That was yesterday's plan. Now let's look at yesterday. So what did we do yesterday? We opened here. This was our balance area. We took out yesterday these week longs, sell stops under here, put it in excess, and then came across the range, took out that high and hit our target on the button, which was 49.50, 48.50. Does that make sense, guys? This is the auction, and this is what you can learn in Trader Lab. Yeah, hi, Stephen. So let's come back. So what is today's plan? Interesting. It depends where we open and what happened in the ETH. So now let's look at the ETH. I will give you guys some statistics, but I want to kind of focus on the things that might be relevant. The first part of this is I'm going to see if I can do this without completely messing things up. In the ETH, and let's just ignore a lot of this at the moment. This is the current high, but I want to go back to what sets everything up. This was yesterday's target, okay? Yesterday's high, which I just showed you, was here, and there were stops over yesterday's high. Very important. And there may be stops over there now. The ETH volume point of control is the retail price. That's the yellow line. If we leave it, it might be saying at the moment, and remember, everything is fluid in this, it is too high. And our ETH high is up here. Now, there's over a 90% probability, and you have to vet this for yourself, that will take out either the ETH high or low. There's about an 82% probability we'll get to the ETH volume point of control. Approximately an 80% probability, let me just confirm this, that I got a lot of statistics, guys. So you got a 85% probability we take out the previous high or low, 83% for the overnight VPOC, overnight mid here, 83% probability, previous close, 72% probability, and right here we have something called a low volume node from the ETH. I'm just going to put it in here. Didn't have a chance to put it in here. And this is important because this is where we fell away. And a low volume node, which I'll be talking about more, separates distributions. Now, what's a distribution? It's really a consolidation. So this, and I posted this in Trader Lab, 46.47 is a target. And it doesn't mean we're not going to get here and wherever. There's nothing in trading that tells us what it will or won't do. But let's go think about, now let's go a little further. By the way, if you have questions, please post them. So this low volume node in the ETH is right here. So what we had in the ETH was too high, and then possibility, once we fall out of this distribution, which is the high volume, the outside edge of this distribution, think of this as, rotations. If you fall away from it, then maybe this is too high. And that's all you have is maybe. So I have this as a target also coming up. And I have some other trades I'm going to talk about in here. Some of these are structured trades, and other trades are just interesting phenomena. The idea of the Trader Lab is to give you kind of a template of process and educate you to understand market mechanics. Most of us are hung up on indicators, as you know, and that's fine. Except we are kind of using an indicator to define what's going on in the market. But the indicators are not context sensitive. They only typically look at rotations, so that's fine. Except, do you want to be long? Do you want to be short? Do you understand different conditions of the market where it's just rotational and not directional? And can you tell, do you have a way to recognize that is defined that the condition of the market changes from one condition to a different condition? And if you're indicator based, you're not going to know, and you're going to be a conflict. Now, nobody predicts, but how quickly can you recognize change? I think the quicker you can recognize change and minimize ambiguity and conflict, the better you can have a defined process and you can make decisions. Because we have to make timely decisions in order to have shall we say, favorable entries, risk management, getting risk neutral, trade management, and targeting. The more you're out of alignment, the more you're going to be chasing the market versus anticipating the market. So let's take a look now. Let's go to the RTH Open. Now, it's important where we open. There are a lot of pieces to this. Now, you might say, oh, this is too complicated. Well, if you're going to compete, you have to be willing to do what the other traders that you're competing against are not willing to do, and that is work. It's because, wouldn't it be nice if we could just get a bunch of indicators and just kind of sort through and get the ones that we like and that we feel comfortable with, and then pile a bunch of them on there, and then we'd have an ATM in the basement? Isn't that our fantasy? We all would love that. Gee whiz, another, turn it on, plug it in, and there it is. I'm going to suggest that's not the way the business works. That's the way you can waste a lot of time, years, and maybe your opportunity. And that's just, I'm only relating to me, not to you. So this is an important area here. And what's important here, hold on a second. Oh, this is kind of weird. Hold on. Hold on, guys. I got to do something here. There you go. So this is an important area. Now, the RTH Open, so we're opening lower inside of yesterday's range. Where are we opening? Well, we're, below everything. And here's the other piece about this. Hopefully I can get this right. This is what's called the naked volume point of control. This was the retail price, I believe, from yesterday. So this is the fair price. Everything we did when we took out the high and took out our target up above, which I already showed you, says maybe that's too high. So the way the auction works, it's going to try to figure out, well, what's too low? I don't know. Do you? Well, this is the highest volume. And the way the auction tends to work is it checks prices. That's why it's an auction. And why do you have a market? It's very simple. What's too high? What's too low? And what's fair? And this creates our rotations as the market tries to figure out what's too high, what's too low, what's fair. Well, if we know from yesterday, this was the fair price, and we know because that's where the volume ended up, and we tested yesterday what was a price that was too high previously. And then if we come, and this is the fair price from yesterday, this was a previous fair price, yesterday's high. And if we get selling in the ETH, what might happen? We're going to return here, and potentially we're going to check lower and then come back. That sets up something called mean reversion. I know. And what else do we know about yesterday? This is very important. Let's come back to yesterday. What do we know about the trend.
Yes.
This is yesterday. That was our target. This is today's fair price. The high volume is there. So I know if this is too high, the market can come back and check what's too low. What else do we know about this from yesterday? The stops were under here. We took them out, and this is an excessive low. So I feel pretty confident that if I take shorts, they're not going to be long-term shorts, and I already have an outside excess. So for me, with an uptrend, there's two possibilities. It is rotational trade in the morning, shorts, but not looking for a big move, and then longs to come back across and squeeze the shorts from the ETH and then come up back up in this area for starters, and then maybe continue with the trend. Is that logical? So all of this is part of auction market theory, and if you're in TraderLab, you would know this. Now, it doesn't mean you would yet have this in your head. You would have a plan, and sequentially, you would review the condition of the market. What's the higher time frame trend? What's the intermediate trend? What happened in the last auction, which is the ETH? What's the current condition of the market? By the way, what did we do yesterday? Took out the weak longs. What might we get today? More selling initially to trap more shorts and then squeeze the ETH shorts and continue to trend. Does this make sense? Dustin, I'm getting a question from the Bookmap Discord Trader Lab community. Don't forget, if you're in YouTube, there's a link there if you want to become part of this community. There's no cost. Hey, Stephen, thanks for posting that. If you're in YouTube, there is a link posted by the demo trader, and it's just up above Gabriel saying, hola, hola, Gabriel. And it's called The Plan to Position for Trend Continuation, Why and How. Watch that. That explains what I just reviewed, and you actually can see the trades and the methodology and the randomness. So today we are basically taking the other side early. So now RTH open, and we're opening lower in range. I already gave you the statistics. I have resistance, a targeting up here. I have, remember, over an 80% probability of this. But for me, the possibility initially is to stay and have an inside day. We had an outside day yesterday. We might have an inside day today. That's my initial assessment. However, the trend is up. So remember the plan for today. Join the shorts quickly. So either side, long or short rotations and balance, knowing that the possibility is to get some longs out from yesterday and continue to selling from the ETH and then squeeze. The shorts in the ETH, they become the buyers, and then it's maybe either stay in here and rotate or continue, because we have a high probability of where lost it. Overnight volume point of control, wherever the heck that thing is. Got to be, I think it's covered up. Guys, where's overnight volume? Oh, it is. It's right there, isn't it? Is that the current high of the day? $51.50? Yeah, okay, thank you. Yeah, so this was that overnight volume point of control. What is it? The highest volume or retail price from ETH. Let's think like shoppers. Is this too high? If this is too high, then we can come back and check what's too low. Statistically, what do we have? The ETH low. Where's the ETH low? It's actually here, I believe. That's a target coming down over 90% probability. And then nothing says you can't take them both out. But for me, maybe not. Doesn't matter. Okay. Any questions, post them. I'll do my best. Thanks for visiting Trader Lab. Now let's take a look. So the market opens in balance. Now, the thing about balance, let's redefine some of these things. If you're at a fair price and the market likes this price because it was the fair price from yesterday, and in an intermediate time frame, now this is yesterday's daily time frame, high volume. Think of it like shopping. Everybody's willing to do business over there. And then in the next time frame higher, and I don't think of time, but I do in the higher time frame. This is the retail price. So I got high volume here. The market is attracted. Think of it like a tractor beam, Star Wars. You guys remember that. Tractor beam. The market is attracted to gravity. High volume operates like gravity or a moon. It attracts the market to test it. That's why we are attracted to what's above us, and we're attracted to this. And the other market mechanic is the sellers were in control in the ETH and going into the RTH open. So the sellers were still in control. So we have choices. Now here's the choice. The choice is at RTH open, we want to do the buyers take control? So that's very important because the trend is up. But again, the sellers are in control. So we have to decide our trade plan. Now, in the Trader Lab, you have a trade plan. Now, if you don't have one, your job when you come to Trader Lab is to understand you're in a business and the business is gaming, not prediction or, I need confirmation. Remember, that's your reptilian brain trying to avoid the saber-toothed tiger or being eaten by some other predator. We experience the market as a predatory environment, and we are the victims. So your psychology or reptilian brain is always going to attempt to protect you. It cannot differentiate. And the fact you have intention has nothing to do with how you will respond. And you need to really embrace this because that is what will take you out of the business. I believe if you're in Trader Lab, you can learn how to trade if you do the work. What you will not understand is why you can't do what you want to do and why you do things that are destructive to you being in this business. You won't understand it because you think it's a matter of willpower. It is not. There's a lot more to being a successful trader and creating a career than just throwing your indicators on a chart and now you think you're a trader. I don't mean to be harsh or insensitive. I'm sharing this with you so you don't waste time. Unless, of course, you have an edge and you're a consistently profitable trader, then don't change anything. By the way, we all have winning trades. Gamblers have winning hands. It has nothing to do with how the house or the casinos extract dollars from the gamblers. We have to choose which side of the table we're going to sit on. I don't know about you. If I'm going to gamble, I'll go to casino. So get the cocktails and the ticket to the buffet. So we open at a fair price. I know, and again, I don't know what will happen. I know the market's short, and I'm looking to see what happens if I get my buyers. And I'm opening here. The yellow line is the fair price, and I'm opening in a fair area. So initially, I'm looking for possibly two-sided trade. The buyers, I don't see them. Where's the buyers? Well, a little rotation, but they're not taking the ball. So let's watch. So the first trades I'm looking for me, was who takes control and possibly, since it's balanced, the condition is called mean reversion. Mean reversion is a specific trade plan for this condition. And you need to understand, nobody knows where the outside edge is in mean reversion. Mean reversion is outside in or rotational trade. And my least favorite condition, because where's the outside? This is part of the joy of randomness. Is this the outside? Should I be selling this? Or should I be getting long? Well, this is where order flow comes in. Because I'm trying to detect, where's my last resistance? Let's go take a look. I got to look over at the ETH. That's my most recent information. I'm below, here, let's look. I'm taking you where they say, no, this is from, was it Star Trek? No trader has gone before, or I should say, most of us have not gone before because we don't think like this. This is an auction. Now, what is an auction? Too low, too high. There's a retail price in the auction. It's over here on the left. And if it's too high, we leave it. Then we start the process at another location. Too high, too low, too high. But in this right here is what's called a low volume node. So it's too low. I fell out. I'm not paying that. Now we go to another store and we rotate. Oh, now that's too high. Oops, sorry. This is too low. Retail. If I fall, and that's right here, I'm going to mark the high volume node. I want you to see how I organize structure. And this is not necessarily, what you should do. But before the market is opening, I'm looking at the ETH. What's going on? And what is the market doing? It's rejecting these higher prices. And now I come down here. Where's my low volume node? Here. Let me go back. I got to get away from the RTH open. So we just have the ETH. It's right here. So low volume node is there. Well, I'm going to label it because these define distributions. I just want to be conscious of them versus being unconscious. And I call them, since it used to be Globex before it was ETH, I'm still in the mode of Globex. So I make a little X in front of it and I put it on my chart. Now this is not where I trade. This is strictly for streaming this computer. So it doesn't have, doesn't bring all these levels over because I do some of these by hand. Let me just get them in here. And there's another level that's very important. And I briefly discussed it in Trader Lab, and that's something called the value area. This is the value area low, and the value area high is there. Value area is yesterday's RTH, where 70% of the volume took place. So yesterday, now don't forget, this is only ETH. Yesterday, this was considered the fair area. And then we went extreme to hit our targets. Well, now we're back inside. If I'm back inside, it's possible the market will rotate in this. So again, I don't know. So now let's go back to the RTH open. So RTH open, now let's look. So I'm opening at a fair price. And in the fair price, I want to be very patient because it can slosh both sides. Here's what I know. My outside edge is here from this. Sorry, guys. I'm just trying to make it clearer for you. For this. Okay, so this is my outside edge from the ETH. This is resistance. Why? I rejected this high volume. This is my retail price in the store. If it's too high, I leave it and I'm, come down here. If this is now resistance. Now, I get a buy sweep and I'm looking for shorts to come back here, and I have a target, the overnight low, which has over 90% probability. So my trade is shorts to there. And, sometimes you start taking these trades and you're going, what am I doing? Why? Because the trend is up. But there's my location. So let's watch. And I always stress trade plan. This is not a mechanical process. Pieces are mechanical, but you have to have a full picture of it. So right here, I see a sweep. I'm looking for a counter rotation. Here, I see a sweep. I'm looking for a counter rotation, and it's chop. But where's my outside edge? If I get a sell sweep, I have the potential to come across the range. And again, I don't know. It could have gone here first, right? Who knows? So my resistance is here, and my target is here. So I know there was a bit of confusion because I was taking shorts, other traders were taking longs. And by the way, I don't have a monopoly on being right. That's not part of it. In fact, the beauty of Trader Lab is, and why you might want to be in a Trader Lab, besides that it's all about the business of trading, is that traders post their trades, they post charts. Traders can be long because they're trading different time frame or fractals. I can be short looking for longs. Isn't that interesting? What's the right answer? It's your answer. If you understand the trend is up and we're in balance, you might use balance or rotational trading only for longs. Or you trade balance and you're going to trade mean reversion, which is outside in, which is here down to there. That's my trade. So I'm taking shorts. Other traders are taking longs. I'm scratching my head and they're scratching theirs. Why are you taking a short? Well, this is why. Here's my sweep. So let's look at this. Sell sweep creates upside potential. Buy sweep creates downside potential. So I'm in chop, and this yellow line says balance. I cannot trade here because this is the fair price. The fair price. I don't want to buy or sell retail. I want to sell too high that comes back to retail, and I want to buy too low that comes back to retail. I cannot participate in the middle. When you have what's called balance or mean reversion, you don't have to do anything, but I suggest you consider staying away from the middle because mean reversion is only outside in trading. Well, let's look. So I got my level. I'm looking and I'm in balance. Chop, chop, chop. I'm opening in balance. Choppity, chop, chop. ETH low, 90% probability. ETH high, 90% probability. Opening lower, stops below us. Longs in the market. You get the story. Sweep. Looking for a short. Outside edge. Watch. This is my micro high volume structure. I have a sweep right here. I'm looking for my trigger. And there's my sweep. So I'm going to put a line across this volume right there. And if you look to the right and you look over here, you see I have high volume and my low volume node is there. Now I'm going to put this thing out of here so we have a little more space because now you know. And now and I have no idea, don't forget. I don't like picking the high of anything. Not my thing. Very much upsets me. So there's my sweep. That is a key piece for me to be looking for the potential trigger. Now, I have to be very careful here because I don't have a lot of range. And what I post in Trader Lab is if you don't, here's what's hard about this. The further out we go, the better it is because I have more range because I'm coming here to go out the bottom to get there. And the liquidity stacks here, by the way, another piece of order flow. So I'm looking for the short, but I must enter gingerly. Watch. So what do I see here? A sweep, buyers. I have, so these are buy stops. And the interesting thing, and the only thing I use from my indicator days and system days is divergence. I've always liked divergence. But the thing about divergence is it's going to happen everywhere. And it's what I find is, since I don't use indicators, I had to learn to read the market so I can be here, not with a lagging indicator. I can't afford to wait for something to roll over. And divergence, as we know, happens everywhere. You know, what's too high? Well, eventually it gets it right. So I'm focused on location. Real estate, location, and divergence, but only at location. So let's look at what we see in the stop and iceberg detector. The market's going higher. I have buy stops coming out 68. Oh my goodness. Broker's are going to send them a parting gift to play at home game and a ticket to the buffet. I go higher. I have less stops. I go higher. I have a little more, but not. This is where the majority is, and I'm exhausting out over here. Now, over here, I only have 7. Over here, I only have 2. Who's buying this thing? Well, what I'm seeing is the market's going up, but I don't have aggressive buyers. I have weak buyers. Stops become market orders, so they show up in the delta, but they're not strong buyers. I'm also looking at the order flow from previously in the ETH, and I saw the sellers were in control and the buyers are weak here. This is part of order flow, and I have to compare it to what happened over here. So I am, because that's the last auction. This was too high. Watch. So What's this? This is a potential trigger. What happened? Let's look at the micro structure. Sellers are here. Sweep. Buyers are here. Looks like it's going higher, but I have my divergence. Break low. Buyers are here. So right here, I have buyers in control, 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 sellers. Where are the sellers? Below the buyers, below the buyers, below the buyers, below the buyers, below the buyers. This sets up trigger. Watch. Watch.
Yes, sure.
Sellers are here. This is setting up a trigger. I'm looking to get short. I have my volume here. My volume is moving higher. So this is support. So it's setting up a trigger. This is my volume. It breaks high. I have nothing here now. I have support. I have my volume moving higher. Now I'm in a very nuanced condition. Buyers are here. Sellers are here. Look at that. 58 stops. That means the shorts in here got taken out. High volume is here. But where am I? Sellers are here. Sellers are under here. Buyers are still in control. Now sellers are here. I know I'm in minutia. I'm showing you a trigger. Now, if you took a short here, your stop has to be at least 3 ticks above this. 1, 2, 3 ticks, right? That's the deal. And this is the target. There's the scale. Now, hold, and where's the target? Here. Let's just watch, see what happens. Resistance. If you took the short here, so the short was here to there, here, trying to there, didn't get it that time, there to there, and then this. I'm sorry for the detailed explanation, but I think it's worth it, isn't it? So that was my short trade. That was it. So, and part of me is going, what are you getting short for? You want to get long. Well, I want to take advantage of these sellers in the ETH. I'll take advantage of them by joining, but just taking a pot shot, because the early buyers, they get thrown under the bus, and then these sellers ultimately go under the bus. So now it's just looking after this, getting along. Now, what's my next trade? Now, this is not a trade I go into often. By the way, if you have questions, post them. I can't see them right here, but I will get into them. And this is an old trade. Old trade. There's something, and this is from my market profile days. I mean, I learned the market profile from the guy who created it, Peter Stottlemyre. He was a grain trader at CBOT. And so early on, and this is in mid-1980s when I learned market profile, I thought it was really cool. The only problem was I decided, since I was still using indicators, I'd put them together, make it better, more certain. Remember that? More certain. Yeah. Well, there's a couple years thrown down the toilet of ending up with Trader Groundhog Day, working hard and not getting a good result. Sequence of winners, winning weeks, winning months, overall not good. Constantly trying to tweak and fix. Is that you? It was me. Didn't understand it. Didn't understand pieces, but messed it up by trying to create more certainty. This is the value area low. So if I come out and check the value area low and I get my target, which was this, so my target was the ETH low, I'm out of the trade, then what? Then I'm going, well, I've got to be thinking about a long. Where is that long? Well, I posted in the Trader Lab right here. Right here, I have a change in context. There's absorption here. I come back to the mid, and now I'm going, well, and right here, I don't know. I'm clueless. But let's look at this change in behavior. Location, location, location. Okay? So I'm looking now for longs. So I see the rotation, and I'm right here. I'm thinking, this is important. 32. I posted this in TraderLab. So I'm going to make a little line. Now, the thing here is I'm still at this fair area, and this is an important area, and I'm out of my short. So let's just watch the behavior. So right here, this is too low. I took a long here, actually here, and I was looking to come across the range. So let's see what happens. Resistance is up here. Variable high volume node. It's here. Very choppy, very nasty. So I got my long, coming across the range to here, and then I'm looking to come out the top. So that was my long. Okay, took a long. This is support now. This area right here is support. And it took it out. So I ended up getting scaled, scratching the trade. And then I'm doing one of those, what's going on? So I come out here, and let's look at the behavior here. So it was interesting to me. So now I come out, I make a new low. Now, it is 9 a.m., and we have the IB30. Now, the thing that you have to remember about this is we're in what's called mean reversion, which is outside in trading. The problem with mean reversion is where's the outside? Now, this is a good short. You can see it structurally. This is all TraderLab. And look where we came. Does this look interesting to you? This is TraderLab process. Now, nobody can predict it, So for me, the idea was, get over here, and take the shorts out. Buy stops are sitting at the opening swing high here. So I want to trade. If I get long, I'm looking to take these guys out, the shorts. The problem, of course, is where do you interact? Let's look. So I come down again. What do I have here? Remember, distribution. The volume is there. And remember, I pointed out earlier here that we had liquidity sitting in here, which was aligned with this. So all of this was good. So I come out, I get my sellers, I have my icebergs, and let's see what else we have here. So absorption is here. Now, when I see this, I have no idea. Why aren't we going to zero? Well, part of it is these guys are absorbed. Now, I don't know they're absorbed until I see the change in behavior. Resistance is sitting here. Notice what happens here, here. So support now is developing here. I have an outside edge of the distribution. Let me show you how I do this. Sellers are here, sellers are here. The sellers are here, right here. So I'm going to draw a little box around this to help you see the distribution. And then I'm going to come up for oxygen after we get this long going. By the way, everybody takes stops. Nobody knows anything. All we know is maybe. So again, I'm looking at what happened was this was the area that I was leaning on. Remember? Well, we took it out. Now I develop a new area, new auction, microstructure. Too low, too high. That's where the sellers are. And now the behavior changes. That is a trigger. The support now is here, and stops are 3 ticks under here. I'm trying to come back here and come out the top. That's my trade. I posted this in TraderLab, and like everything else, who knows? Where's my support? It's here. Where's my stop? 3 ticks under here. Scale, and then value area high. This is a value area trade. Let's just watch it. Where's my support? Let me open this up for you. This is structured trading. You can learn this. I'm not saying, you want to learn it. I'm saying it is a way to understand market mechanics. And if you understand how the market works, at times you might be able to get in alignment with it. Value area high, this is the target. There's a sweep here. suggests counter rotation. There's a sweep here, suggests rotation up. What's the trend? Higher. Does that make sense? I see I just looked at it, yesterday's high and the overnight volume point of control, 82% probability. Where's my target? Value area, high. And that was it for me on my long. Now, let's see if we have other trades in here. Let's look. Because of our probabilities, if we pull back, now what have we done? We've now checked this. We went below. We got the overnight low. We found our buyers. Now we're back on the yellow brick road with the trend. Let's watch. Now, so I got my target. It was this. Okay, value area high. And I posted that in Trader Lab. Now the market rotates. We're still in mean reversion. This is what mean reversion looks like. So now you have a choice. You could fade this, which I did not do because the trend is up and I'm going to squeeze the shorts out. I have no short trades now. Now, if I want, I could trade back in mean reversion. But for me, since I know the ETH is short and this is part of trade plan, I'm only going to take longs. I didn't take any more after this. Just saying. I got tied up with other stuff and that was that. So if you come back in, you have to then start looking for how can you get back on. Or your stop is under the low of the day, or you start trading in fractals. So let's look at the fractal. At 9:30, we have something called the IB high, and we took it out right here. This is the first hour's high. Over 90% probability we take it out, which we did right at 9:30. We mean revert. This sets up a structured trade called the IBF or IB failure. The IBF is a mean reversion trade. It comes back here. This is the target. So you have choices. When you come inside, but here's the problem with the IBF, and there is a problem with it. You would only be getting short here, and this is your primary target. And it's called the IB failure, and it's because we've come out under this distribution, and then we come back here, high volume. That's the primary target, so you'd only have there to there. If you understood this and the sweep, you could be shorting this. This is advanced to come back to there, more advanced. Not saying anybody should do it. For me, at this point, it's longs only. So I didn't take any more long trades, but I'm going to show you how they would work. If you come back in, mean reversion, so it's still balanced, but we already took out remember, the market is short, and now I got more shorts in to squeeze these guys, and now if I rotate back, the idea is, can I get long somewhere now? Support's down here and here. Level. Okay? That's another reason why I'm looking for these longs. So if we come back in, right? So what happened was, there's your excess. Here's your mean reversion. Here's your pulling to the outside. Support is sitting here, out here, outside level, retail price, and we could come outside anywhere. Now, this is your support, right to the line, no clue. High volume is here. Let's draw a little line on it. Now, this, I understand, might be conflicted because our volume point of control is here. You might not take this trade. I understand. Except, and here's where you got to be thinking from many different angles. This is the retail price from yesterday, and this is an intermediate time frame retail price. I already got the shorts trapped. And if I get my sellers, what happens with my buyers? My sellers exhaust here. They're absorbed. I got buying icebergs. Thanks for playing. I get sell stops coming out. I get a trigger. I have a trigger here. My sellers were there. My buyers are here. Buyers are in, take control here. These sellers are under the bus. The sellers are in control there. So I got my buyer here, my seller here. That's why you get the rotation. My buyers are here, my sellers are here. I break out. Now my buyers are over the sellers. Buyers are here, sellers are here. Sellers take a shot here. This is a trigger, and now it's an entry long, and then you manage your trade. High volume is sitting there. This is trading in fractals. If you get long, you got to scale in front of the high volume, and then you're going up to here to settlement. Yesterday's high, 80%-ish, 82%-ish here. Past performance, not recommendation of, And then we have the ETH high, which does not have a high probability, but the trend is up. And I think that gets us current, and I appreciate your patience. Oh, look at this. I didn't see this. Look what's sitting up here. Notice all the liquidity got added in the book. Very important to understand that. That's like a wall. If you're sitting here and you have an order flow tool like Bookmap, here's what you know. Settlement had liquidity. That's a viable target. If we get above, then we can come back to yesterday's high and the ETH VPOC. Remember, those are the targets at the top of the stream. This is trading the auction. Now, what do you do about this? Well, if the trend is up, you have choices. This is a exit because it's just a statistical target. These are statistical targets. This was that fair price. That was our target from yesterday. We're back at a fair area, and it would be an exit for me. And subject to your skill set, it also could be a fade or a counter trend trade. Remember, this was our target yesterday, 48.50. And yesterday's high was a target for today. And then the ETH volume point of control retail price. Remember, if retail's too high, what's too low? Well, we checked out the ETH low. This is the fair price. If this is maybe too low, what does the market tend to do? Is that really too high? So we have that, and we have the ETH high. If that's too high, we can rotate. And then it's either a counter trend trade, or you put the Ferrari back in the garage and you have a pina colada, depending what time of the day it is. Does that make sense? Questions, guys? Thanks for your patience. Hope you guys are getting something out of this. This is Trader Lab process. Now, it is not relevant what I do. I am only doing a very simple process. I've taken my experience as a long-term shopper, because that's what the auction is. It's shopping. What is too high? What is too low? What's a fair price? The function of the market is trying to figure out what's too high and what's too low. If you go to the store and the price is too high, you're going to leave the store. You might not pay it. What happened up here? Well, at the moment, the buying, we had 3,000 contracts exchanged here. There's 600 up here, and probably less if I open this up on the top. We ran out of buyers. What else do we know? In the ETH, this was the highest volume, but we traded away from it. Is it possible the reason we traded away from it was too high? If the retail price in a store or auction is too high and I come back to it, is it possible that it's still too high and the market participants are just checking? Well, if I get the stacking and I have a sell trigger, I can get short for mean reversion, advanced, by the way. And where are the stops? Under the mid, at the VWAP, and who knows where. So if I take a fade, I need the scale ahead of the mid. And why, Tom? Because we might get mechanical retail buyers at the mid. So if I take a short, my target is ahead of the mid, ahead of the VWAP. And if I have a runner, I'm looking to come back here or not. It never has to. It might only come out to one of these low volume areas. It may stop here. It can do anything. How do we solve for randomness? It's called edge, trade plan, statistical probabilities, wear a helmet, and manage your trade. That's the answer. We all have the same questions, but where are the answers and what are the answers? You can get the answers in the Trader Lab. But it's not mechanical. It is process. So some traders are going to be out of their longs here and they're going to go to lunch or go to the gym. Other traders are trading this for the counter rotation, and here's why. What's in this leg? Longs. Where are their stops? Here. If you're a retail trader, write this down. Think like a retail trader. Don't act like one. If you're long, where might there be stops? Wouldn't it be here? There? There? So if I get short, where am I trading? Back to here. To get all, and it doesn't have to do it ever. So that's my trade. And why am I doing that? The market goes up to go down. The market goes down to go up. The market goes up to go down. The market rotates, guys, in all fractals and time frames. This is a short for me. If I wasn't streaming, this is just a trade I'd take. And why? Because that's too high. Why? Stack liquidity. Why? Trigger. Why? Longs. What does the market do? Rotates. Unless we're in a trend configuration where it's every man and woman for themselves, it's sell stops are in the long leg, buy stops are going to be in the short leg. This is a short in the Trader Lab. It's advanced because it's counter trend. What I always suggest for developing traders is you pick a side and let it be the dominant side and stay away from the counter trend. Do the continuation trades. Because if you can't sort it out and develop an edge when you're with the strong side, how are you going to navigate when you're taking the opposite side? You see? So the idea of Trader Lab is to help you understand the business of trading. This is a business. If you want to be in the business of trading, you got to learn what you're trying, the business you're trying to participate in. I can assure you, most developing traders don't know the business they're actually in, and they're trying to meet their psychological needs of avoiding risk, certainty, and confirmation. What is it mean if that doesn't exist? If it didn't exist, then what are you doing? You have a dysfunctional belief that does not apply to this environment. Do you think maybe if you adjusted your understanding of the environment you're in, you could then put your energy into solving and not doing a process that most retail traders do, where, as we know, most have no sustainability in the business. And we all have winning trades. I think that probably, you might think it's a good thing to have a winning trade, but for developing traders, it's actually not a good thing because anybody can have a winning trade. You don't need a chart. You don't even need to buy or sell. You just push a random button and generator of buy or sell, and you'd still have winning trades. What does that tell you about randomness? Questions, guys. And remember, I'm here for you guys. I'm an advocate for developing traders. Part of it has to do with what I went through. I started in 1980 when technical analysis was really bar charts and, your head and shoulders and measured moves. Technical indicators were new. When I started trading as an off-floor trader, there were no off-floor traders. Technical analysis was looked down upon aggressively, if you can imagine that. It was all fundamental analysis, reports, all that kind of stuff. Money supply. And early in 1980, there was technical analysis, but it was pretty basic, moving averages, a Bollinger Band. Boy, they got excited about that. you know, and of course we got into Fibonacci and Elliott wave and Gann. I mean, all the stuff. Been there, done that, which is why I don't do any of it. So I had to find something. I had to find why it wasn't working. And then I realized why it wasn't working is because I was thinking and doing what other traders do, and most of them will not be successful, as we know. So I forced myself to use no indicators, and it was very hard. I mean, those of you, if you're new to the stream, I shared an office with George Lane. He created stochastics. I thought that was the holy grail. I was always looking for the needle in the haystack and for something that others didn't see. Well, how about everybody's seen everything you've seen and probably a lot more? So if we all know the same stuff, there's nothing unique here. There's no magic bullet. It doesn't exist. Then what might be the solution? Maybe. How about not doing what everyone else does and finding out, get to the basis of what all those indicators are trying to do? They are detecting derivatives of price and some kind of price change. Okay, how can I do that without an indicator? If I understand how the market works and I can read order flow right here, I can understand what's happening and why it's happening and where it might happen. Does that give me an edge? The answer is yes. Now, can you learn this? You come to Trader Lab and roll your sleeves up and open your mind? Yes. Can you build a business? Maybe. And you got to roll your sleeves up. This is a competitive business. It is a performance-based business. How are you going to differentiate yourself? And why is this a target, by the way? Because of the stops that are under this swing. All these longs in this leg, hasta la vista, thanks for playing. My target is ahead of this. Why? I anticipate a reaction here. Why? Retail trader behavior. If I get a reaction and I have runner, then possibly there's going to be stops under here, and I can still get a reaction and come back there or there. I already know that, but I can't tell you what's going to happen. It's not in my playbook. I can't predict anything. I do not predict. I keep my mind open, fluid, and all I do is manage my trade based on the microstructure of the participation between, where's the sellers? They're here. Where are the buyers? There. What happened? They got thrown under the bus. Thanks for playing. What do I know here? Sellers are in control here. I test the sellers. What does it tell me? Sellers are still in control. Where might I get buyers? Here. My scale, or a target, depending on number of runners, is ahead of this, not at it, ahead of it. Then what? I anticipate, right? To participate. Counter rotation. Mechanical retail trading buying. The gamblers, do they get paid? Yes. Do the casinos pay the gamblers? Yes. What is it called? Overhead and costs of production. It's not an approval of your brilliance. It is random. This is not where you go to get a pat on the back. This is business, and you don't control the outcome. You do control what you do. Hopefully. And if you don't, you need to learn about the psychology and how we are triggered emotionally and how that drives us to do things that are not in our interest. FOMO, revenge trading, skipping trades, bailing out, moving stops, all of it. So how do you measure yourself in this business? It's by having an edge and knowing where it is, where it might show up, acting accordingly, and knowing that you have a probability of one thing happening over the other. And this is where I'm going if I had this trade on, which I really wish I did. But I don't, because I don't trade and stream. Been there, done that. Not pretty. Questions? How we doing, guys? How we doing in YouTube? Please give a like. These streams are available, and the library of webinars are available to everyone in the Bookmap Discord Trader Lab community. There's no cost. And let me just show you that while we're waiting for this mid to get tagged and possibly for it to go lower. I do a lot of posting. There's a lot of questions, a lot of interaction. You'll see this is what's going on in Trader Lab. It's very interactive community, and anything can happen. And you're all welcome. Use the link in the bottom of YouTube. Here, I'm reminding them about what yesterday was. It was a neutral day. There's a possibility of about a 30% possibility of a neutral day. Here's a trader who I think took a short. We have balance. We're in mean reversion. That's outside in trading. All of this is posted. Now, it doesn't mean if I have time, I do it. If I don't, I don't. I'm a full-time trader. While I'm trading, I'm also narrating. It's not a trade calling room. It's for educational purposes only. The point of the Trader Lab is to give you an education that you might not be able to get anywhere else and to show you how you can integrate order flow so you have microstructure to operate in. Now remember, ahead of the mid. So you would need to be scaled looking for this reaction. How do I know this might happen here? 45 years of trading is one part, and the other part is observation of retail trader behavior. Now, what's under here? Stops. And where did we go? And by the way, I'm going to get right to that, but here's the library of webinars, and you're all welcome to that. Are you a trader or a gambler? Why do most retail traders using indicators fail? Are you trapped in trader Groundhog Day? That's me. That's how I started thinking of it. Getting excited, curve fitting something, thinking now I got it, and then waking up in the same place over and over and over again. At some point, you gotta say what's going on here. Let's look at where the stops are. Where were they? Let's come back. Here. Where do we go? There. So when I'm targeting, I'm looking at locations of potential behavior, and I'm looking at where the fuel is. The fuel, I call it, is there. The market goes up to go down, the fuel. And then the market can go down to go up. We still have stops at the mid in the VWAP. So now it's a trade management process. Subject to your plan. What do we know? Too high? Sellers are here. What about here? Sellers were here. What do I know here? Possibly, and there's a microstructure, too low. You could cover your short and be done with it. Does it matter? Would you be okay with this? Me, I'm okay with it. I don't think much about it. I don't predict anything. I just try to align, and then I just let it go at that. This is where I'm trying to go. And what I'm watching all the time is the order flow. So I know I've got sellers in control here and there. Right here, the sellers got absorbed and I broke high. So right here, you see that little high volume node coming out? That's my little auction. And there's the change in behavior. You could be out of your short here and not even think about it. Now, I still think it's possible it comes here and here, but it doesn't matter. I took my trade, if I did. I wish I did. I'm telling you, I wish I did. And I'm okay with this. Would you be all right with this? Almost a 10-point trade. With the scale, you'd definitely be, have a nice little trade here. Then here's your choice. You're out and you got nothing to do, or you see, the thing about this trade here is I have nothing here, and I don't call trades. I think it's possible it can go here and here, but I don't have a trade. So I took the counter trend. I got the stops. Remember where they were, under here. And now I don't have to do anything. I just hang out and I wait for an edge. Now, what would my edge be? Now the trend is up. I already got my primary targets. What do I want to do with this? I have choices. I can be trading either side here, or I just sit and wait. And I do think the possibility exists to come here. And if we get under here, we can start, maybe get back to this. But that's it for me. Questions, guys? And remember, I don't call trades. You don't need to take my stop. I take them very effectively. How we doing in YouTube? How about a thumb up? Give a like. Hope you're getting something out of this. Remember, there's a link posted in YouTube, and you guys ought to grab it. If you scroll up a little bit, you'll see right under where Demo Trader posted, consider joining Discord community, join the Trader Lab, which you can. There's a link at the bottom of YouTube. There's no cost to become part of the community and take advantage of all the education. That link gives you yesterday's stream, which set up yesterday. And then today is a continuation of yesterday's behavior and the ETH. This is how this fits together. And all we're doing is following the yellow brick road. So let's see what happens here. So with order flow, we would be able to tell, not what will happen, but right here, this is a buy trigger. Now, does it mean get long? Well, I use triggers a few different ways. I use them for entry, and I use them for trade management. And if I'm in an area where I'm interested in, and it's not to buy the mid, by the way, it might be, but primarily what I do, and it doesn't mean, I don't get every trade. I don't get every rotation. That's not the job. The job is to put a methodology together that gives you a statistical edge, not to be looking for every wiggle. I think most traders, developing traders, come into the business. Every time they see a rotation, they think, and they look at it in hindsight, they go, oh, I could have traded that. Oh, I could have got long there. And then they throw a stochastic or a MACD or some derivative process on here, and then they see how it crossed over and they think it's trading. Maybe it is, for you, but it's not for me. So for me, this is what's important. And then this. In between, I'm just going from there to there. If I get a trigger, it's a trade management process. I'm out of the trade. I go on to the next trade. That's how deep this gets. How many of these do you need? Me? So you saw I had a short. I had a long to the developing value area high. I get another long. I get a short. How many of these do you need? You don't need a lot. And I find, I'm only talking about me, it's my psychology. I can trade almost any rotation, but it has to fit for risk management. That's always job number one. Then I understand market mechanics. You can learn that in the Trader Lab. Then after that, I don't know. I take stops every day. If I don't take a stop, I get worried about it. Because I know then that it's going to affect me psychologically and it will. Because it'll hang in my brain emotionally and I'll actually get overconfident. And I know from, shall we say, experience that doesn't last too long. So when I have a day where if I have 5 or 6 trades and I take no stops, on one hand, it feels good. But I also know it's an outlier, and that's not really the way this works. Because every business pays bills, and ours is paying the other side, just like the casinos. You guys have questions? Yeah, thanks, Steve. Thanks for posting that. Guys, Steven just posted yesterday's webinar. Grab the link. You can get a lot out of it. It talks trade preparation, anticipation, trade locations. It went into the shorts. It went into the longs. It went into the targeting. Same as today. I do this every day, and you're all welcome to this stream. You're also welcome to Trader Lab. This is really what trading is. It's trade plan, process, and then punt. Because we don't know what's going to happen and where. Do I know we're not going to get here on this rotation? Absolutely not. So what's my trade management process? Order flow and location. This is the location. Now, does this mean we're going higher and we're going to take this out? I don't know. I don't have a long, so I'm in park. This is just one trade. So I'm okay taking this side because these guys, this is the process. This was the reason for the trade. Is this logical? Why I would trade in the stops? How we doing in YouTube? Give a like if you're getting something from this. Also, join the Trader Lab. There's no cost. And it's a community of like-minded traders. The thing about Trader Lab is we are leveraging our collective experience. We have newer developing traders in there, and then we have old dogs. And I think I'm now qualifying for an old dog medal, probably a trophy for doing this for 45 years. But you'll learn a lot in trading. But a lot of us think that learning the trade is, figuring all this out. The part that I think is the most difficult part of this whole thing, I believe anyone can learn to trade if you come to Trader Lab. The problem is going to be the psychology and your emotional stimulus. I call that Hyde, Jekyll and Hyde. And if you're not familiar with the story of Dr. Jekyll and Mr. Hyde, just Google it up and give it a brief read, just an overview of it. So you understand the concept. Hyde is the other side of our psychology. In other words, there's you, the conscious mind, and Hyde, call it the lunatic who's, behind the screen. Your conscious mind sits over your reptilian brain, which is wired to avoid risk, the saber-tooth tiger, and it can't differentiate. And that emotional stimulus, which is under the hood and under your intelligence or consciousness, because it developed earlier in our development and led to survival of the species. Those that didn't have a good avoidance and risk avoidance mechanism got consumed by the predators. It's logical. Well, your brain and this reptilian Hyde cannot differentiate between a saber-tooth tiger and the risk that we face at every moment in the market. So it's going to overwhelm your consciousness, and you're going to do things that only Hyde would do, which is a lunatic and someone who's strictly guided by emotions and not intellect. And you don't really understand this because this is a foreign environment. So you've never had to understand or deal with this because it's built in to protect you. And it's not a bad thing to have, except it's really problematic in trading because it is going to interfere and cause you to do things that are absolutely not in your best interest. And that's something you're going to learn about. And if you come to Trader Lab, we can help you with that. But that's going to be your major obstacle, ultimately. And it's common. So none of us are special. We all think we're unique and we're wonderful and we're gifted. Not in this business. All that goes out the window because you can't bring that here. You can bring tenacity, but you got to learn the problems, and then you got to start dealing with solutions and accepting that in this environment, you're not the boss. Hyde is running the show, and you've got to learn how to master Hyde. Because no matter what you intend to do, Hyde is running the show. So the only way to get, in my opinion, control is to acknowledge and understand and learn about Hyde, and then learn the tools that you can deploy to manage Hyde. Because ultimately, that'll take you out of the business. It's one thing not to have an edge, which most retail traders don't. That'll take you out of the business. But add into that the FOMO and the lunacy that comes from from Hyde interfering. So you have no edge and you have Hyde. Where are you going? How about out the door? So we've got to have an edge. We got to have a trade plan, and we have to learn about Hyde and learn how to manage Hyde. That's the business. You want to learn about the business, you come to Trader Lab. I think it'll help you on your journey. And I'm not saying it'll solve the problem, because you got to do the work, and you're going to be challenged beyond anything I think you can imagine. Resistance is here. Why? Sellers are in control here. Here's another way to look at this. This is an outside edge. It's a low volume node. What does this set up? Two possibilities. Rotation back to here, or squeeze through here. That's it. This is an outside edge. What were we looking at before? Outside edges, rotations. Well, doesn't this happen fractally? Where's the outside edge? It's out here. So I know if I come out This was where the market broke away. So this was too high. I got resistance sitting right there. And the outside edge where the buyers got run over is right there. So we're going to evaluate this when it comes up here. Now here's the possibilities. Straight north, trend is up, or again, we found too high and we're only rotating to an outside edge here. And again, that was too high inside of yesterday's range, and we'll see. So if I find sellers up here, I can then come back here and I can then take these guys out. If I don't find sellers up here, then I've got nothing to do. That's what I know. That's all I know. Let's watch. We're in an uptrend, but what we don't know is, have we found too high? We're going to know pretty soon. So let's watch. The sellers were here. They took over. So the question becomes, now there's stops here also. So you got to think from both sides. The sellers were here. So I want to see the behavior here. And this is not, remember, this is not a trade recommendation. What this is, anticipate behavior and just see then if you can read it. I don't use indicators. So what I have to do is I got to read the language. So I'm actually reading what's called a foreign language. And it's not, takes time. If you want to play a musical instrument or read a language or speak a foreign language, what do you have to do? How about a lot of practice? And you got to understand. So what do we know? I know this is potential resistance. So let's just watch the behavior. Now, if I don't get anything happening here, I got nothing to do. And this is not a trade recommendation. What do I know? Stops are here and down here. So I can look at this level and I can say, okay, I'm at an outside edge. I have, this was too high. I know this is kind of high. All this, and I know that was too high. Let's see what it does. That's all I can do. Are you guys tracking? This is TraderLab. E26. Oh, JTrade. That E is, for example, this is a executed iceberg, and that's a stop and iceberg detector. Here I have one buy stop coming out, or 56 and 1, potentially stop divergence, and I got 15. So this is an area to observe. Not, remember, this is not anything more than maybe, because there's nothing more in this than maybe. So we have to remember, stops are here, sellers were here, there's your trigger, another trigger, and resistance. If I can't get above here and keep going, then I may counter rotate. If I keep going, I got nothing to do. I'm just observing behavior. And it looks like it's going to keep going. But let's see. Because I'm outside now. So nothing to do. So this is kind of what I do about this. I just go, okay, this is an area. What's it going to do? And then I'm waiting. I got buyers above here. I have nothing to do. So nothing to do. JTrade, I hope that answered your question. Please give a like in YouTube. And remember, these streams are available. How do I know there's stops there? Designs in TraderLab. I know there's stops because it's a swing. And anytime you have a ledge or a swing like this, there's going to be stops. What happens, though, is what happens if we come up to an area. If we take stops and I get exhaustion, then I know it was just a squeeze and I can fade it. What happened here was I came up to the location and there's my buy stops coming off and there was no fade because there's my structure right out here. So right in here is the area to get short to come back here. Didn't do it. I don't have a trade. So now let's look a little further. Where's my stops? There and out here. So I have nothing to do. This was not a long for me. It could be for somebody else. It was just for me. I just took the short. I mean, I say I would take it because I didn't take it, but I'm saying is this is a short for me. But this is not necessarily a long. Could be. But for me, this would be a short cover, you see, because I'm trading the counter trend. Somebody else might take a long. I don't have a trade from the long here. I have a trigger, but I don't have a location. So I just, doesn't matter to me. I just take the trades that fit for me, and I don't care about the rest of it. So if it doesn't come to a location, because I'm anticipating buying here, right? And stops. And then if I had a trigger here, I could take the long and scale at a high volume area and then manage the trade. So that's another way to do it. But for a structured trade, this is not a structured trade. Final questions. I got about 5 minutes. Please give a like in YouTube if you like it. If JTrade, if you want to learn about this, come to the Bookmap Discord Trader Lab community. Use the link in the bottom of YouTube. There's no cost for it. There's a whole library of webinars, plus the Bookmap knowledge base. This is called the MBO bundle, and it's market by order. So basically, we're reading the tags that are from the CME. Now, there's a sweep. This is a potential reversal structure. Where do we come back? Is this still too high? See, method to madness and underlined madness. So we want to watch the behavior right here, right there, here. So we want to watch this behavior. It's not a trade recommendation. Let's see what it does. I came back to a location. It was too high. So trend is up. High of the day is here. So, if we know there's shorts in the market now, you have to decide, do you want to sell this and try to trade mean reversion? Or, and here's the or, always makes it joyful. Are these guys going to get abused? Resistance, sellers, high volume here. So this is an area to observe. Let's watch it. And I'm running out of time. Now, I'm not advocating counter trend trading. I'm not advocating anything. What I'm advocating is that you learn the business of trading and that you take it one piece, one step at a time. Do you realize you only need one structured, vetted trade that has a statistical edge, and you can actually, assuming you can manage your emotional states, which is another separate topic, that you could actually potentially build out the business one piece at a time. So right here is resistance, and I'm seeing that my sellers were absorbed here and that the trend is up and that I don't have anything. I'm watching the behavior here. Now, if you fade this, it's extremely aggressive because we're near the high of the day and we're in an uptrend. So you don't have to be doing anything here. You could just hang out. No trade. Or if you're an aggressive counter trend trader, you'd be evaluating this. But I think I think the counter trend trade has already kind of left the station. You want to see what it does here. And the reason you'd look at it is because the sellers were here. So we have stops sitting here, and we got to see the behavior in this area. Any kind of short is extremely aggressive and counter trend. There's our levels. We're at our levels. Let's watch the behavior. I've only got a couple of minutes, like 2. Please give a like. These streams and our library of webinars, and there's 60 PDFs of these structured trades, broad strokes that you can use to kind of reverse engineer and get a basic understanding of what I am sharing here. Obviously, there's a lot more to this. Some of this was research oriented. I work with developers at Bookmap. Some of the tools that are now in Bookmap. And this is like from 2020, 21. Some of the tools are integrated into the add-ons. Other of these experiments were thrown out the window. And I want to invite you all to come and visit Trader Lab. Use the link in the bottom of YouTube. Please leave a like. Encourages me to continue this since there is no cost. Use the link in the bottom of YouTube if you want to check out TraderLab. And you're all invited. Remember, if you don't have an edge and if you don't treat this like a business, then it's really just a video game. Thanks for visiting the Trader Lab, guys. Look forward to seeing you tomorrow. Please leave a like. It encourages me to continue doing the stream, and there is no cost. Take care, guys. Look forward to seeing you soon. And don't forget to leave a like on the way out.